Hey everyone, welcome to the Smart Economy Podcast, a production of neonewstoday.com. I'm your host, Dylan Grabowski. In this episode of the pod, I sat down and spoke with Mounir Benchemled, the founder of ParaSwap, a DeFi aggregation service provider. In this conversation, we discussed founding a DeFi protocol before the vertical exploded in the summer of 2020, the types of users that are accessing the ParaSwap aggregator service, lessons learned from surviving a malicious attack of black hat hackers, getting a blockchain application listed in the iOS Apple Store, and so much more. Just a reminder, nothing said on this podcast is a solicitation to buy or sell any tokens, and that the guest or host might hold tokens discussed in any given episode. You can check out a disclaimer on www.neonewstoday.com. Also, if you enjoyed this episode, please rate and review it on your favorite podcasting platform and share it with your friends and family. Every rating, review, like, and comment helps us reach more people and bring you more of your favorite guests. I really enjoyed this conversation with Mounir, and I hope you enjoyed the episode too. Hey everyone, welcome to the Smart Economy Podcast. Today we're joined by Mounir Benchemled, the founder of ParaSwap, an OG DeFi aggregator turned protocol that was founded in 2019. How are you doing today, Mounir?
Hey, Dylan. Nice to meet you. Great to be here. I'm doing really good.
Awesome. I had a lot of fun preparing for this chat because ParaSwap is just an OG kind of founded before DeFi summer. And to be able to survive the booms and the busts and the bulls and the bears is not only just kind of a feat in and of itself in the blockchain space, but particularly to be a DeFi project. So there's got to have been lots of lessons learned and things that you've seen over the years. So I kind of want to jump into the conversation asking you like a high level sort of philosophical or maybe something that you've noticed. And I just want to know from your perspective, where do you think that we've gotten things right with DeFi? And where do you think that we still need to see improvements to really onboard the mainstream masses?
Yeah, that's a very interesting question. I think we've gotten a few things right, many things wrong. I would still say that DeFi is still experimental because we haven't figured out yet what is a playbook that works for, let's say, the majority of cases. But still, I think DeFi added a lot of value to many people. You can see like the biggest use case right now, you can argue stablecoins used inside DeFi, but also outside, like other fintech or TradeFi leveraging stablecoins for international payments and going even more and more with the recent bridge acquisition, for instance. So I think that's maybe one of the biggest things we got right. But also I think we are building the future financial rails. We've seen also more and more one of the BlackRocks looking to build experiments so far in DeFi, which I think and I hope will become real in the future. So DeFi is not just like liquidity pools and lending in nice, let's say, fruits and investables protocols, but also it's a technology that can be used behind the scenes and replacing very old school 1970s like COBOL type of software. So I think in like a real world cases, DeFi is proving itself as a pure technology that can be an alternative to the existing system.
Do you think that BlackRock tokenizing a fund with the Biddle Fund and other TradFi entities kind of entering into the DeFi space, is that positive for the industry? Because cryptocurrencies and blockchains came from this crypto anarchist sort of anti-state background. But here today in 2024, a lot of people are celebrating Ethereum and Bitcoin ETFs, not just in the US, but across the world. So is these TradFi guys getting into the game, is this kind of good for DeFi users as a whole, for protocols such as ParaSwap?
Well, I think it's not a zero sum, right? Because they can still use DeFi, they can still benefit from the technology that has been built over years, but that doesn't take anything out of the benefit we wanted to see in DeFi. We wanted to see decentralization, we wanted to see self-sovereignty. It's not mutually exclusive. They can still use the tech we have built as a community over the years and provide it to their users, even though you can argue if the DeFi still makes sense here because those technologies are highly centralized and what they use is mostly like the smart contract system and the infrastructure we built, but they are everything but really DeFi because at the end they control the whole thing and everything is KYC, AML. But I would say it's positive because it proves how resilient the technology itself, the core technology is, to the level that those big actors that have a lot of constraints in terms of commercial constraints, but especially regulatory constraints, are able to find real solutions in this technology.
And maybe taking a step back, what's your genesis into crypto? If you're like me and so many other guests that we've had, maybe you looked at Bitcoin or Ethereum and kind of overlooked it, and then maybe came back a few years later with an aha moment. So I'm just kind of curious to hear what your entrance into the space was like.
Yeah, it looks a little bit like that. So first connection with Bitcoin was a bit technical in like 2012 or something like that. I didn't pay that much attention. I was super interested with the idea. Actually, it's much before I used to play Second Life. If you remember, they had this Linden dollar or something like that. And when I heard about the idea of Bitcoin, it's like, okay, the same thing, but completely decentralized. Like it's not owned by the platform. That was the thing that ticked on me. And in 2013, this is where I started becoming more and more interested in Bitcoin, and only Bitcoin at that time, but not as much as I became in 2017, where I literally left my job just to do something in crypto without even knowing what that thing would be. I just like knew that this is what I want to be. This is what I want to work on. This is the thing I want to invest like all my time in. And it was like nothing like before. So I guess, yeah, many of you guys, yourself, they can identify with this story.
I left a city planning career in 2018 and went full-time into crypto. Were you working in computer sciences or something related when you left? What was your previous career?
Yeah, I was a software engineer at that time. I was a CTO of a Paris-based startup. I was in software engineering. I think I have converted many people in the team into crypto, including my boss, where maybe each time we had a meeting, we would maybe half of the time talk about crypto in the market and the other half talk about work. So yeah, it was like that.
What were the conversations like? Because 2017, this is when Ethereum starts really running up. The ICO kind of mania is really starting to pick up. So were you guys just talking about token price, or were you talking about technologies? Were your peers kind of getting excited about what blockchain could or couldn't be?
Yeah, I think it was more about the technology and the potential solutions that this can bring. We were arguing a lot because at that time he was convinced that it's pointless tech, even though you can see like the financial benefit. Like if you invest, you can like 100x your bags. But it was like an interesting discussions about why this tech may not be relevant for the West or the developed countries, but super relevant for other countries. Like at that time, we used to use Venezuela a lot as an example. But I guess since then, many countries also became good examples for like inflation and also government power overusing their power against their populations. So I think we used to have a lot of this kind of discussions. Obviously, you could not like take a look at the market who was in a crazy mania, but I'm still having a hard time thinking which one was like quote unquote the worst. Was it like 2017 or the DeFi summer we had in 2020 or the NFT boom we had in 21?
It's super interesting that you bring that up. I was listening to a podcast the other day talking about what the killer use case is for this cycle, the 2024 bull cycle. And as you mentioned, in 2017, we had ICOs. In 2020, we had DeFi Summer. In 2021, we had NFTs. And that made it very possible for the Western audience to kind of grab on to an idea for this kind of hyper speculative bull market to take effect. And we don't necessarily have that new activity, that new DApp, that new use case today for the West. But if you zoom out and take a look back, lots of countries on the African continent, lots of countries that are in hyperinflative currencies, they are able to use stablecoins. And this really is a killer use case that blockchain has enabled. It's just not something that is number go up infinitely. So as we start to see kind of stablecoins become more used around the world, are you starting to see at ParaSwap some of your user base go beyond what your traditional user base was for the past couple of years? Are you starting to see more of a global audience as opposed to maybe like a degen who just wanted to trade and perform swaps across different networks?
I would say, well, ParaSwap, first of all, is mostly used by third parties. Like 5% of our volume is comes from like the likes of Aave, MetaMask, Ledger, and Co., or even just third parties doing arbitrage or many different use cases. We can clearly see some trends, like meme coins are still big, they're trading a lot, but not directly through the ParaSwap UI, like directly using our UI, but using third parties. But stablecoins have been always a big use case. If you look at the volume, stablecoins, I forget the numbers, but like are big use cases. That at least the biggest transactions, if you see transactions of tens of millions of dollars, likely those are stablecoin transactions. They could be either like arbitrage, or it could be like people moving their asset from a lending protocol or a yield generating protocol to another one. And because the other ones has a better APY for the other stablecoin being swapped.
How have you guys been able to adapt to changes over the years in market activity? You just mentioned that meme coins today are kind of the topic of the day, but in 2020, it was all these food tokens, and in 2021, it was NFTs. So how does ParaSwap kind of position itself to be nimble and move with the market when these new kind of narratives take off that really excite traders?
Yeah, one of the things we did is this move to B2B, where in the beginning we were like focused on user acquisition to our user interface. In this case, yes, we would have to change our message and adapt it to the audience. I remember that was interesting when we went from Ethereum only DeFi chain to multi-chains with the Binance Smart Chain, Polygon, where the audience had completely changed. We used to deal only with the DeFi OGs, and many people we even knew personally, to like a 10x, even 20x growth in user base, trading small amounts, and have a lot of like, let's say, new buy type of demands, where we had to adapt everything from user support, from even the product itself, in order to make sure we cover this audience and we serve them best. So yeah, basically it was like just a retail type of audience who would normally go to Binance and Coinbase. They started using DEXs because this was the opportunity in DeFi. So this was a turning moment. But then moving forward, we started to prefer to focus on integrations, like with third parties like an Aave or Ledger. So we can provide the best possible service in a B2B fashion. So they can provide also the best possible service to their customers. And the good thing is that we also had this experience of dealing with retail users. So the tooling we can provide and the customer support we can provide would still adapt. So it's still indirectly adapting to market dynamics, but I would say mostly on a commercial and a B2B point of view instead of a direct to consumer type of product.
I'm not sure the best way to word this question. As you have like a retail focus for the platform and providing services for retail users, and then you also have a kind of B2B focus and providing services for B2B, how do regulations kind of come into your purview and impact the way that you guys build? I'm a US based user and I can't use ParaSwap right now. So clearly like US regulations are unfavorable to the platform and you guys just don't want to deal with the SEC or anybody here who will clamp down. So how does kind of the different regulations around the world impact your decision to offer B2B services or B2B focused services or retail focused services?
Yeah, unfortunately, that's something super distracting. That it's not my favorite topics of focus, especially with some long calls with lawyers and trying to follow their hard guidelines that are not convenient. Me as a product person, also as an engineer, would like to move fast and iterate and do experiments and talk to users and all of that. While here, obviously in this space, you don't want to move too fast, like for security and making products robust, but also you want to respect like some local regulations and also some unclear regulations. So you don't want to take too much risk because that will impact the product and will impact the persons working on those products. So yeah, not really my favorite thing to focus on, but unfortunately, yes, this is something that is shaping the decision making, even in terms of product. But I hope this will change, that we have some at least good signs in Europe where the regulators seem quite open to the DeFi space. And I don't know about the US, everyone's speculating that the next elections will be positive no matter who is coming, who is winning. So I hope it will be the case. I think the US is the biggest economy and where we saw most of the innovation in technology. So it's really a shame that it is the place right now that everyone is trying to avoid. But I hope it will change. My wish is, like I said, told to everyone, if I were to choose a country where I would like to build a company, it will be the US. if it was not like the status wasn't like as it is right now.
Yeah. And I know that regulations are like the least sexy thing about crypto and blockchain in general, but just one more question, because you are based in the EU, and I'm just wondering, does Mika make it easier for you to be based in the EU? Do you think that Mika will attract more builders to kind of locate to one of the different countries in that regulatory jurisdiction?
Well, I'm not a lawyer, so I may not have the right answer, but my understanding at least is, or at least like the common knowledge is that DeFi is explicitly excluded from Mika on its current version. And there was a project to revisit Mika in V2 and to include DeFi, but we haven't seen any progress so far, which means that DeFi is still not a topic, but it's consciously excluded from the current version of Mika, which is a good thing. I also had previously, as many entrepreneurs based in Europe, discussions with some representatives from people in like working in the innovation teams of the regulatory bodies. What I can see is that they seem at least to be in good faith and try to like move things forward and not kill innovation. So there is no clarity per se yet on how DeFi is seen by the regulator. There's no clarity if that will continue or become positive, because now there's no regulation and there is a explicit exclusion, but that doesn't mean that the future regulations will be positive. So we still don't know, but I would say so far it's still better than the case of the US.
I agree. Last week or 2 weeks ago now, I was in Permissionless, and I got to interview over 20 projects on the ground for the podcast. And a lot of the questions kind of revolved here in the States around the regulatory ambiguity. And something that I really appreciated from these conversations was the general gist was, yes, we have to be concerned or pay attention to this, but these protocols we're building are bigger than states. They're bigger than countries. They're bigger than nations. They're code that live on decentralized networks that will continue to persist whether or not a government bans them or not. So I guess maybe like zooming away from talking about countries and regulations, what was the kind of motivation that brought you to building ParaSwap? How is this DeFi protocol, or I guess how have you been able to fare over the past 5 years when it was the Wild West in 2019 to kind of dealing with rough governments today? How have you kind of been able to ride the waves of building a DeFi protocol, and what kind of keeps you motivated to keep building in DeFi today?
It's funny because in 2019, nobody was paying attention to DeFi at all. Like I was just discussing that. I wasn't even able to get friends of mine to join me as like co-founders. So that's why I went for a solo founder, because like nobody heard about this thing. It was really small, even in conferences, in crypto conferences, like nobody was talking about DeFi at all. And to the point now we have politicians literally talking about DeFi, even launching DeFi protocols. They're really funny. So I think this is amazing. And what led me is I was a user like in 2017, as we were discussing. I was using Ether Delta at that time, which had a horrible UX and had a lot of users. So to me, it was like, okay, not working well, but everyone wants that software. So let's build something much better that can be used by everyone. So there was a clear opportunity. But then other protocols launched. That was in late 2018. So Uniswap just launched, Kyber, 0x, Bancor. All of these guys start to see some liquidity, some volume. So I changed the direction to, instead of building yet another DEX, let's build an aggregator so that we can gather this liquidity and make it look like a big exchange instead of like 5 small ones. So this was the point of start of ParaSwap, and led me to build a product that's meant to be for retail, like for everyone. The target users was like users of Coinbase and Binance, which was a very naive idea. It didn't work at all because the market was just not ready. Like the first feedbacks I used to get is, I want to trade Bitcoin. I don't see Bitcoin. And I had a hard time explaining this is EVM based. The moment I start explaining, I completely lose them. So I very quickly understood that this is not the right audience and that product is very early for its market, which wouldn't be the case today. And so it led me to pivot. And at that time, the reasoning was DeFi is still a niche, even though I believe that DeFi is the future and the current state is not right. Like crypto is supposed to be decentralized, and the very way of trading crypto is super, super centralized. So it was just a matter of time. But meanwhile, we have to build a product that will serve a purpose. And there was a community called DeFi, small one of few thousand people in the Telegram group. So this was my starting point of building an aggregator. Thing is, meanwhile, there was some other project who launched. One is like our competitor right now, 1inch, that launched meanwhile. I was doing these experiments and had some traction. So I was like, yes, I am on the right spot. Like there was somebody else who thought about the same thing. So it was just me at the time, launched in September 2019 and rest of history. But that version is what ParaSwap look like today, with like a lot of evolutions in terms of product and features and all of that.
Yeah. Do you remember the moment when you realized you were building something that people were actually going to use, maybe like during DeFi summer? Was there a particular day when you saw a lot of volume being routed through your aggregator, or maybe a particular day or time frame when you noticed a bunch of people were applying to come work with you?
One interesting day was during the COVID crash. That was pre-DeFi summer, because before I used to see a few $1,000s, maybe a few 100,000, stuff like that, like even never like close to $1 million. But during the day, I think the US closed its borders or something like that. There was a big crash in everything in crypto. Even I remember this was the MakerDAO. They go like it was an issue with MakerDAO at that time. Anyways, that day we went from doing a few 100K to like almost 4 million. Was for me a mind blowing. And I remember that day I never stopped working. I was working from outside, from in a shopping mall and seeing like all these volumes and millions of dollars processed. And I remember at that day, gas spiked to like 100 way. And there was a token called gas token, if you remember that time, where you could mint it and burn it and get the gas refund. So I started like just minting like crazy and doing it arbitrage. I was just paying from my own pocket. There was like no investors or no funding at that time, but it was still cheap, relatively cheap to like accumulate some and buy from Uniswap and mint some when the gas is cheap. So that attracted a lot of users. And yeah, that was the day I would say in 2020. That was mind blowing. But in DeFi summer, this became like the new normal where you see multiple millions a day traded. Yeah, were fun days. Like DeFi small, but growing exponentially. It was something that nobody imagined in 2019, like literally a year before.
So you mentioned that paradigm kind of shifted when you integrated support for Polygon and for Binance Smart Chain. Those were kind of like the first alt L1s or alt blockchains that kind of started taking traction after Ethereum. And in the past year and a half, 2 years, we've seen this explosion of L2s with optimistic rollups and things of this nature. So what are some of the similarities and differences that you've seen over the years when ParaSwap had to learn how to integrate support and adapt to the different alt L1 communities of Binance Smart Chain and Polygon? And what are the things that might be similar or different when you guys started adding support for L2s like Optimism or Arbitrum or Base?
Yeah, there are definitely a lot of similar patterns, where Arbitrum at some point remind me a lot of the Polygon BSC days. But now, even though we have a lot of L2s and even alt L1s, there's still the biggest ones and the long tail. And we have to be selective because it takes some time to build support for a chain. Just 3 days, not a big deal in general, but what takes time is maintaining that chain and making sure the users are well served and integrations and all of that. So we try to be a bit selective, and still liquidity is concentrated in some of the top chains. Like if you look at DeFi Llama, you have obviously Ethereum and top 5-6 L2s that capture 99% of the liquidity. Sometimes we may do some exceptions, like we have a big partner like with ZK EVM. We were used by QuickSwap, and for them it was very important. So we added ZK EVM. But in this kind of cases we try to figure out a way, but that's with ParaSwap Delta, the new product we launched. It's an intent-centric protocol. So that we can do what we did with DEXs, where we can build some kind of automation. So everyone can have their own ParaSwap. Like if you launch a chain, you can have oracles, you can have stables and all of that. And you can have an aggregator, which will be ParaSwap Delta. It's much more flexible. So if there's an automation, it will be on Delta side, not on the aggregator. But yeah, I saw a lot of similar patterns with Base when and I didn't expect that at all. Obviously, you could say it's supported by Coinbase, that they have a lot of great distribution. But yeah, I would still expect that there would be always like a maximum, a top 10 of the biggest L1s, L2s, and the long tail that's not everyone will be chasing.
Yeah, I know liquidity is king when it comes to DEXs, particularly aggregators. But what's the trade-off when you see maybe a strong community of developers or maybe a chain that has a lot of users but might not necessarily have the liquidity? At what point do you guys kind of make a trade-off and say, well, there's a lot of users here and there's a lot of dev activity. Maybe we'll take a gamble and hope that more liquidity finds its way to the chain. Does that kind of play into which chains you guys support? Or is it really like, is there liquidity first?
Frankly, we're thinking about it in the future, but it's not something we have done yet. But it makes a lot of sense because if you come back like 2020, I remember people talking about Polygon. Very few people believed in this model of alt L1s, even though now looking back, it seemed obvious because the ETH gas spiked and became impossible to use, like unless you are a big whale trading 7-8 figures type of like transactions. It seems obvious right now. So I think, yes, maybe it's a very good thing to like put some bets on some projects, but given the size of our team, it's very hard because you need to split focus. And my role as an entrepreneur is to like see what I can filter out and say more no's than yes, so that we avoid distraction. But it's definitely a good thing. If you find the right project, you become like an investor where you put some bets, and if you're right, you will be rewarded. I called it.
Yeah, so ParaSwap Delta launched this year, and you did mention it's an intent-centric middleware. Can you just kind of maybe Eli 5 or just elevator pitch what an intent-based trading solution is? And then we can talk a little bit more about how that benefits the ParaSwap users.
Yeah, sure. So now when you use ParaSwap or most of the DeFi protocols, you are responsible for your trade end to end. Like you need to have a wallet, you load the ETH, you need to sign a transaction, put it yourself in the mempool, make sure you don't get front run. You need to deal with a lot of technical and non-technical details. While with intents, you just choose whatever you want to do, like swap token A for B, push a button, and somebody else who's going to take care of the complexities on your behalf. But what you care about is I want 10 ETH or I want 5 DAI, whatever. And what you expect is you get that amount of that token you wanted. And that's all.
And do I need to intent? Sorry, do I need to use like a smart wallet or is there?
Not necessarily.
Okay.
Not necessarily, but smart wallet, yes, take intent into another level because they came with a lot of nice features. But basically now, if you go to Delta, you don't need to have gas at all in your wallets. Like you say, you want to buy ETH with USDC. So USDC, you can just like approve using permit. You just sign a message, and the trade to authorize the trade, you just sign another message. No need to have gas at all. And behind the scenes, there are what you call agents. So there are entities that compete to provide you the best. Not only the best possible price, but also the best possible execution. This is where what we call MEV resistance, what we get into if you want. But yeah, they try to give you the best price, so they bid. It's like ad bidding, like when you go to a website and entities bid to like provide you their ad. Here it's for giving you the best possible price. And the winner is the one who gets the right to execute the transaction. And they have the constraint incentives. You can get into that if you want, making the best possible execution. And here, this is where we get into MEV resistance and which makes the user get the maximum possible amounts here if you're trading ETH. So they will try to get you as much ETH as possible.
So maybe we could take a step back and kind of dig into why ParaSwap is focusing on MEV resistance right now. And I kind of wanted to touch upon the exploit that occurred a little bit earlier this year, because I think that, and a lot of people should think this, that protocols that are able to survive malicious attacks and exploits and survive, they build back better. And this lesson learned is actually a great value add for users in the future, because a team was able to ward off an attack. So maybe we can take a step back and then use this exploit to kind of highlight why MEV resistance is so important. So just let me know where I got whatever I have wrong and maybe fill in the gaps or correct me where I'm wrong. But in March of this year, there was an attack where 24K of losses were experienced. And then a white hack had to perform a much larger attack in order to preserve the assets that were associated with the ParaSwap ecosystem. And then there were a follow-up series of exploits that resulted in more losses. So maybe you could just kind of explain a little bit about the exploit, how a malicious actor was able to exploit resources, and how the white hack was able to jump in and help provide a stop loss.
Yeah, it was maybe one of the most difficult times I had in ParaSwap, because I had like literally almost a week without sleeping. And it happened, it was 2 days after we launched what you call the V6, like is a new version of our smart contracts. And we just had a support ticket of a user saying, I did a swap and I didn't receive. No, they said, I did a swap, transaction failed, and the smart contracts, they took the fund from us, which is a typical kind of support ticket we get from many users who just like don't read well the Explorer. And we didn't pay that much attention, but the user insisted, like, really, here is my wallet, please check. It's really happened. Just check. It was late at night. It was like 9 p.m. Our time or something like that. We checked and we noticed that something is very wrong. Like the funds were taken from their wallets. And then we gathered all of us, the team, and we found that yes, there is a vulnerability. And that 24K was taken by accident. It wasn't a real exploit. Those are what you would call generalized MEV bots, where they use some internal statistical models to analyze the mempool, and based on what they find, they will spot an opportunity. So those were small opportunities that just like 24K. And this is where we put ourselves in a crisis mode. So the whole team, and we reach out to Samsung and the SEAL 911 team, which is like a team that helps, like a voluntary persons who help protocols in case of crisis. So we got on a big call that stayed the whole night till like 8 a.m. or even more in the morning, trying to write the white hat. So two of our engineers were writing the white hat. That's like the idea that emerged very quickly during this call. The bug was in a Uniswap v3 implementation, where when you make a swap, it doesn't check for the color. So if you give an approval, like allowance to the contracts, I can reuse that approval and do the transaction on your behalf and take away your funds, basically. So we write like a new module that will exploit users who have provided allowance to the contracts. And this is how we were able to rescue $3.5 million, put it on a safe wallet so they can come later and claim. But the thing is, some users have provided, that we try to remember, yes, we couldn't save all the users because some users have provided they provided an allowance, but they didn't have the funds, so there's nothing to exploit. That was the problem. So the thing is, we had to build a bot that will listen to the mempool, and once they deposit, we will white hack them right away. But that took some time, and the moment we had to go public, announce, because there were two choices: either we keep this secret so we can like limit the damage as much as we can, but we weren't sure if we're supposed to do that, because if I were a user, I would want to know that very fast so that I can safeguard my money. It's because it's not ours. That was the choice we made collectively, is that this is something that everyone should know, and we should over communicate so that everyone would know, but at the same time, hackers would know. So what we did in the same time is build those white hat bots, except that some hackers were much more sophisticated and they were much faster. They had forever to build those bots. We had few hours, but so they were an exploit of few 100,000. I think we reached like 1 million that we recovered later. Almost 80%, if I remember well, that was recovered, or 70%. The rest was a fund. The DAO funded the rest, the 300K. But also over time, like the next following 2 days, this is where we had finally the time to make our bots work much better. So they became much more sophisticated than the MEV attackers, like the hackers, basically. So we were able to see on chain that our transaction was always faster than the other hackers, which wasn't something fun to do. I mean, it's fun like to learn about a lot of things about MEV, but the level of stress that pushed us to build something that normally takes months, but it worked. At least we were able to save a lot of users moving forward, because many, they didn't read our communication and like the news and all of that. Some media were reported immediately, like Cointelegraph. Others didn't pay attention, which is what very important, because they could have saved a lot of users by just reporting the white hats. But still, I think, yes, overall damage was very limited and contained. Like nobody lost money at all at the end with the funds we recovered and the ones we white hats. But yeah, it was a hell of an experiment that I wish that I never had to deal with again.
Yes, because it's other people's assets that are on the line, and you're protecting them so that you can protect your credibility. I see a lot of parallels to the ETH DAO hack, where you had to kind of build a white hat bot in real time to respond to black hats that were attacking the network. So, and it's just insane that this happened within 48 hours after V6 launched the Augustus swapper. So I guess something that's really difficult to wrap our heads around is the weight that we put into auditing firms when they audit our contracts. So they're necessary. We want third parties to audit our contracts, but they're not perfect. And this instance where you had to deal with black hats isn't the only case that a DeFi protocol or a DeFi aggregator or anything on blockchain really has suffered a malicious attack after being verified by multiple smart contract auditing firms. So what was kind of like a lesson or a takeaway that you and your team had after dealing with this malicious attack and protecting your users? Did you, I don't want to say put blame on the auditing firms, but did you add a new layer of resiliency and review to your processes now so that you don't just depend on third parties and assume that their reviews are worth their weight in gold?
Yeah, 100%. Yeah, a lot of changes internally in the process, because you can, as you said, you can put the blame on auditors, and you said they should have seen it. And there were three separate auditing firms. So we think we understand how we could have done better, and we addressed that. Basically, yeah, it seems simplistic, but it's really like that, because smart contracts are hard, even though the code itself is more or less simple. But you have to get it right. If you break a button in the UI, you just like your user is going to complain. But if you introduce a vulnerability in a contract, stuff like that would happen. But in general, in the processes of auditing, you write the code, you submit it to auditors. And often it's quite tempting to add a new feature. You can say like just this simple feature we want to add. And normally the auditors are supposed to re-audit each time you add something, which was the case here. We added something that was a small feature, but we broke something else, which is like a regression, is normal in software. But I think the communication wasn't enough that pushed the auditors to take this very seriously and really effectively re-audit the whole thing and look for regressions. So now the rule is to never change anything, no feature at all, once we build a contract to be audited, unless a vulnerability or a bug is found in this case. Obviously, normally we're going to fix it, but we want to always make sure that the auditors revisit the whole contract and make sure that we haven't broke anything else. But zero features, many teams, they do that already. Many teams, they do it, but like us, it was the general practice. But since we were moving more or less fast and we thought that it's just a small feature we would be adding here and there, we got into that issue, which normally wasn't supposed to happen because we have 3 auditors. But anyways, we have to make sure, as you said, there are different layers of protection, but never trusting any third party that they will do the right thing, because they can also make mistakes and others can make mistakes. So I think right now the process, at least as we can see right now from the latest audits, they feel much more robust and much more controlled, given the new conscious we have right now that we didn't have in the past.
You mentioned that you guys were able to secure the funds from the Black Hats after the event. So what was that kind of communication and negotiation process like? I can imagine it was very stressful dealing with millions of dollars or over $1 million and not knowing if you were going to get it back. But you were able to kind of turn the Black Hat into a gray hat because you got 80% plus amount of funds returned. So how did you guys go about negotiating, reaching out to the malicious actors. Maybe there's some lessons learned from your experience that others hearing this right now might be able to take as nuggets of gold in case they have to go through something similar in the future. Just really curious to hear what it was like basically negotiating with a bad actor.
One thing is simple, is just messaging them on chain. We did with some and some were responsive because they were also this generalized type of MEV bots, at least what they claim, because this happened also after we communicated, but doesn't matter. They were responsive and we offered them to keep 10% of the outcome. So they replied right away, no question asked. But some others, especially one with the highest amount, they had like out of the million, they had like 700K. So this was the big fish we were really going after, and we put all our energy. Some details I cannot unfortunately share, but normally you work with analytics companies that they try to go very deep in on-chain analysis, because we're still on-chain no matter what you do. Like, you may think you would be hiding, but I mean, everything is public. So many hackers, they are very good at writing sophisticated code that will make such an exploit, but not as good as hiding the traces, because there's no way to hide this trace. It's public. And if you use a centralized service, this is where you make your first mistake. So I think, yes, this is how hackers are catched in general. Some, I think, in other projects that exploited hundreds of, at least tens of millions of dollars. I think some, they still resist to date, but I believe it's just a matter of time before they get caught, because the moment they will want to cash out on this money, this is where they're going to hit a centralized system. This is where, unless this is a government type of attack, like a North Korea type of attack. But the funny thing I learned is that some hackers, they try to make themselves look like a Lazarus group, so that the project will let go, because they say they will assume that they lost this topic. And that's something I learned. It was interesting. Like, I learned a lot of things, some unfortunately I cannot share, but yes, it takes a lot of resilience and creativity. I think one, I'm not sure I can share it, but I can do it after the podcast. There was an article published where we shared some of the techniques we used to catch that 700K guy using some NFTs and stuff, which people I think can verify on chain. But like how we get there, it's something that's very hard to share publicly, unfortunately.
No worries, not at all. And I don't want to really, I think, thank you so much for going into this. Like, so many lessons learned, and you guys can't really handled it well and were able to recover a lot of the stolen funds. I think the last thing I want to ask about this is, did you have your relationship with the on-chain analytics firms before the attack, or did you establish this after the attack? And if you could give a tip to another DeFi protocol or aggregator out there, would it be to make sure that you have a good relationship with research and analytics firms the second you start working on your protocols?
Well, I think it's good to have prior knowledge, because it's faster, because at that time you need to react super fast. So if you have a contact, you just reach out to them in Telegram and get a quote from all the parties. And good also to know them before, so you know which one is the best. Normally they're like top 2, 3, and the rest, yeah, in this situation you want to go with the ones who have the best track records, unless you know another party personally or through other circumstances that they are as good. But for us, it was chain analysis at that time, because they was like the most available, not because the others are bad, but they were available. They could have stopped right away. We know the person working there. They are very well, they're very good, like very talented. And yeah, it helps as in any other case where you want to achieve something, and a person from the inside, you get things done much faster.
Yeah, I mean, so like with me, I've been in blockchain crypto since 2017. Whenever I use anything, I'm just assuming that there's a risk that I might lose all my funds. And this is just something that I understand as an individual participating in the Wild West of decentralized money networks. Did your users feel similar? You mentioned that you had a wide swath of retail users on board, and you've more recently been focusing on B2B. So how did the various different types of users you have kind of feel about the attack and your response to it? Were they caught off guard? Was this something that they were kind of planning for and hoping didn't happen? Were they understanding of you and your team and the ways that you guys were kind of combating this attack?
Yeah, obviously people were super stressed, because you lose your money, and the good thing is you were over communicating. And literally for every support ticket, we could just send them a tweet we just made 5 minutes ago, and they could follow up So we put obviously more efforts in support, in Discord, in private, like in intercom, and all of that. But we were trying to just over communicate. Each time there is something new, we write a tweet about it. We share Notion documents. I would say it was very stressful, of course, and people losing money, lost like hundreds of thousands. But still, it was well handled by our team through good communication, and whether private or public.
And you mentioned that the DAO helped compensate users. So was this part of ParaSwap's treasury? Did you guys have like, I don't want to use a centralized exchanges example, but like a SAFU fund? Did you guys have like a pool of funds in case this happened? Or did you have to take a hit to your own runway in order to help make users whole again?
No, it was the DAO treasury that gets accumulated from our revenue. So the ParaSwap revenue, 20% of the revenue goes to a DAO treasury. 80% is captured by stakers, token stakers. So that 20%, part of the 20% was used through a governance proposal, and the DAO voted for.
Cool. So using this experience, what did you and your team learn about MEV resistance? Did it change anything that you already, like an understanding that you already had about MEV? Did it change the way in which you protect users against MEV? Like, other than the scope of the lesson that you learned, like how did this help change the offerings that ParaSwap has?
I think we became experts in a very short amount of time. I would never imagine that. Many things I wanted to learn actually before I learned them within like those 3 days. And also like MEV, and not only on Ethereum, but also on other chains. So yeah, a lot of things. I don't know if this would have solved the problem at all. Like if we were in Delta, you could have still had that problem. Although we try to push users through, like in non-L2s, to not do always by default infinite approvals. That's something, especially for large amounts, because if nobody had done infinite approvals, we could have saved them much easily. We could have easily said, because like one of the things we built on the bots is if you have a limited approval, we will do a flash loan to match your approval, and we will like do a fake swap that will just consume your approval, so nothing happens in your wallet. Like you say, you have USDC approved, you don't have USDC in your wallet, we will like send you USDT, do a fake swap, and then refund the flash loan. That's on the, so like we reset your approval. But unlimited approval, there's no way we could have done that. So we try to like make sure users understand, at least like for some, they know what they're doing, they control very well their wallet. For others, they take things for granted. As you said, they assume that DeFi is decentralized, thus it's safe, which is not true, because like you can have exploit like this, which can be quite damaging. But I think, I don't know if intent would have really solved the problem, but what I can say, at least the one thing I took from here is expertise in MEV and understanding a lot of nuances that weren't known before.
So zooming out from swapping, another service that ParaSwap offers is OTC. So I was just wondering if you could share a little bit about the differences between the OTC feature and the swapping feature.
So swap, it uses on-chain liquidity. Could be like a Balancer, Uniswap, you name it, in terms of security. We also have a protocol called Augustus RFQ, which is an RFQ/limit holders protocol. And so it can be used by market makers. Like we have a network of market makers doing RFQ. You can see them as like each one as a DEX or a liquidity pool. And the same protocol is used for OTC. So if you want to do an OTC, you can use the OTC feature that's using Augustus RFQ protocol or swap for like peer-to-peer trading. In theory, you can also, in case like we agree that you will sell me ETH and I will pay you in USDC, then I can change my mind. I can still pay in USDT. It will do the conversion on the fly, like convert USDT to USDC and like fulfill the trade. It can also do NFTs, which is something we haven't implemented in the UI, and we did it in 2022. It was still were hot, but the feature didn't really take off. But that's a possibility. You can sell an NFT and the payer can pay with any token. So you expect ETH, but I can pay in any token I want. So and the swap can happen on the fly. That's also one of the nice features. So yeah, that's what the feature is about.
And is the peer-to-peer NFT trader still live, or is that just kind of a back-shelved?
By the way, it was the first version of our iOS app that's still in the App Store, but it's less and less our focus. The main value prop of our iOS app, and this is in 2020, was you can buy and sell NFTs peer-to-peer. And by magic, it was approved by Apple. They said nothing, and we were like super happy. We were pushing this use case. It was like something we really liked as a feature. feature, but 3, 4, 5 months later, for an update, Apple blocked everything and they asked us to use their Apple Pay. Like they needed like the 30% out of each NFT sale. We spent weeks trying to explain to them that, well, like people are not paying us this fee, they're paying it through the Ethereum blockchain, but they still wanted 30% cuts of those gas fees. It was really a difficult discussion. So we had to remove the NFC feature. It exists on the backend in the smart contract, but from the app. And then they went after our swap feature in iOS, which took us months to convince them. And each time we had to do some iteration. At some point, we removed the swap and we found a trick to put it back. We did it the first time, it worked. The second time didn't work. So we went always back and forth with Apple. That led us into like not focusing so much on the app. It's still there. It's working really well, especially if you use Ledger. It's really fast. But yeah, that's the story behind it. I mean, we went from OTC to the iOS, but yeah, it was the first use case. It was in our iOS app.
Incredible. Kind of zooming out, I did want to just touch really quickly on the ParaSwap token. You mentioned that stakers earn 80% of the fees that are accumulated on the platform. Are there any other roles that the PSP token has within the ParaSwap ecosystem?
Yes, it's for stakers, they capture part of the revenue, but also stakers, they can have gas refund. So if you stake PSP, depending on how much you staked, you can get up to 95% of gas refunded, still in stake token, but that you can unstake, of course. But that's the other use case of the token, is to encourage people to use ParaSwap and get parts of the gas refunded to them. It works for Delta as well.
And the token was airdropped, like a little over 7% of the supply was airdropped in November 2021. I think in the just broader blockchain ecosystem, we've seen a lot of negative press about airdrops, particularly for low float, high FDV chains. So I'm just curious to hear if you feel like you performed the token airdrop at the right time in November 2021. Do you wish that maybe you'd done it at a different time? Are there any just kind of like key takeaways that you have for the airdrop and maybe the negative press we've seen about airdrops this past year?
Yeah, sure. For us, the timing was definitely not right for us because it was like the top of the markets. If you look at the chart, this is where like the markets changed the direction. So it wasn't great for many of the people who got the airdrop, especially those who held onto it. Also, yeah, I mean, all of this is obvious. Like we didn't perform the best possible execution for that airdrop. We could have done much, much better. It was the early days of airdrop farming that started, especially after not Uniswap, but like in 2021, this is where we started seeing a lot of emergence of farming, and we had a lot of sophisticated farmers doing tens of thousands of transactions. And we went maybe too hard and thinking that we are doing the right thing of protecting the other legitimate users, but we went way too hard that we excluded a lot of legitimate users that were pissed. And the thing is, yes, the community we formed was also protective and thought that it's too late to do another airdrop. So we thought that let's focus on the existing community and not try to do a V2, which I think was a mistake. We should have pushed harder for a V2 airdrop because people took that kind of personally, as if we did it in purpose, which was definitely not the case. But yeah, it's very hard. It's very easy now to look at the past and think of what could have done better. But if we were to do it again, I think I would seek more feedback. And I think the project would give it like this, where instead of just doing the airdrop, maybe this became normal nowadays. So just doing the airdrop, where you publish the airdrop plans and the community will have at least a chance to give an opinion on whether they like it, they don't. So yeah, a lot of things we could have done much better. If I were to do it again, it would have been done differently. But to your point of high float FDV, in any ways, like also the point systems. Now, these days, we are questioning everything related to airdrop, even airdrop themselves. Are airdrop good or not? And I'm still mitigated whether it's airdrop are good or not. They're good because they give ownership to the community, but they are bad because we see a lot of much more orders of magnitude farming of those airdrop that are super opportunistic and defy the purpose of the airdrop. So maybe we would see some mix between public sales like the ICO type of 2017 and airdrops. And something, I guess, that should be continuous, not done like in one shot as we did, because it builds this feedback loop and the customer acquisition, which I think is the point also of airdrops.
And I'll just say, maybe a project founder would never say this, but nobody's ever happy with what they get with airdrops. Everybody always wants more. So I don't think you could have ever satisfied everybody anyways. So if there's a silver lining, then maybe that's a good takeaway. We are at the end of the hour. I want to thank you so much for giving us a portion of your day to come chat on the Smart Economy podcast about ParaSwap. If anybody is listening to this and they want to reach out to you, who do you want to hear from and what's the best way that they can contact you?
Well, they can follow us at Twitter, x.com/ParaSwap. They can reach out to me. Maybe you can put it in the show notes, Mounir, exactly at Mounir. That's my X account.
Awesome. Well, Mounir, thank you so much for taking the time to chat with us. This was an awesome conversation. I had a lot of fun digging into what ParaSwap's working on. I think there was a lot of nuggets of wisdom that came from the experience that you and your team had earlier this year dealing with a malicious actor. And it's always great to see projects deal with these moments of adversity and rise like the phoenix and come out stronger on the other side. So thank you so much for joining us today. It was a pleasure.
Thank you, Dylan. It was fun. Thank you.
Smart Economy Podcast. To stay in the loop with all our latest episodes and insights, head over to www.smarteconomypodcast.com. And don't forget to subscribe to our YouTube channel for all of our video content. If you enjoyed today's discussion, please show your support by liking, commenting, and reviewing this episode on your favorite podcasting platform. Your feedback helps us reach more listeners and brings even better content your way. We'd also love to hear from you, so please drop a comment on Spotify or YouTube to share what topics you'd like us to cover and who you might like to see as our next guest. And if you or someone you know would make a great guest, please feel free to reach out. We're always on the hunt for fresh voices and new perspectives. And for our NEO token holders out there, please consider voting for NEO News today as your council representative. We've proudly been serving the NEO ecosystem since 2017, and will continue to do so by putting portions of our council rewards directly back into ecosystem growth initiatives. With all that said, thanks again so much for listening, and we can't wait to catch you next time.